Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on a Monday, and we will start with US equities, which rose on Friday, with the Nasdaq 100 gaining 0.9% to close at an all-time high, while the S&P 500 finished 0.8% higher at 6,389. Sentiment continues to remain upbeat due to mostly better than expected earnings, but weakness in the labor market is making some investors worried about an economy that is slowing down. Elsewhere, President Trump's tariffs are seeing international equities outperform the S&P 500 by the most since 2022. Coming to the markets, the VIX dropped 8.6% to 15.2. The dollar index fell for the fifth time in 6 days, while the US 10-year Treasury yield inched higher toward 4.3%. In commodities, gold closed flat near $3,400 an ounce, while oil prices were down for 6 straight days and settled around $66 a barrel on reports of a possible truce between Russia and Ukraine, with Trump set to meet President Putin on August 15th. At home, the rupee finished at 87.66, up slightly. Hopes remain that some kind of a resolution will be struck inside the 3-week window, allowed for the additional 25% tariff to come into effect. Speaking stocks, in the Nifty ended 233 points down at 24,363 as the tariff hangover continued. The benchmark finished lower for the 6th straight week, in a streak that was last seen at the depth of the COVID crisis in 2020. The India VIX rose 3% to settle just about 12. Mid-caps and small caps fell more than the Nifty. All of the NSE sectors fell, with realty and metal dropping 2.1% and 1.8% respectively. Media stocks fell the least, becoming the best performer. NTPC was the best performer in the Nifty as it rose 1.5%, while Bharti was the worst as it fell 3.3%. Technically speaking, the Nifty now sits in an up gap area from May that extends from 24,164 to 24,378, while the flattening 200-day average lies around 24,000. This zone remains critical medium-term support, while immediate support rests at 24,258. Meanwhile, provisional data showed that foreigners invested over 1,900 crores on Friday. The month-to-date outflow is nearly 14,000 crores. On to derivatives now. In the Nifty's put-call ratio went from 0.92 to 0.66, while the bank Nifties went from 0.84 to 0.76. Nifty puts liquidated were significantly more than the liquidation seen in calls, and implied volatility jumped 164 basis points, which means on Friday, people exited short put or bullish positioning as the market fell. For options expiring on 14th August, resistance sits in the 24,500 to 600 area, while support extends from 24,200 to 300. Elsewhere, volatility traders were positioned neutral for today's session. Speaking net index options activity, foreigners and prop traders flipped back to bearish, while retail investors turned bullish. Elsewhere, foreigners' net short positioning in index futures rose by 10,000 contracts to 183,000 contracts in what was an increase in bearish bets. Looking forward to the day, Asian markets were largely up along with the US index futures. Coming to stocks, Ambuja Cements, Mastech and Netweb were at horizontal support, while ICICI Pru Life Insurance and Poonawalla FinCorp were at horizontal resistance. Aster DM, Emcure and Cipla were at trendline support, while Bajaj Auto, Eicher Motors and BLS were at trendline resistance. Talking breadth, 25%, 47% and 49% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. That wraps up the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Have a good day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.